I hope you took the bait because that's what you're going to hear about today. This is the IssuesWatch podcast. Hello, and welcome to the IssuesWatch podcast. I'm Brad Muniz, your host of the bi-weekly accounting and auditing episodes. I'm a partner in charge of accounting and auditing with Sobel & Company. These A&A episodes now qualify for NJCPA credit. If you're interested in earning CPE credit for this or other episodes, hit the pause button now and head over to njcpa.org/nano to find out how. A quick disclaimer, the views and statements expressed herein are my own and not necessarily those of NJCPA or Sobel & Company. So, as I said in my intro, bait. Business alternative income tax, pass-through entity tax. No, this is not Nicole DeRosa's tax issues watch. This is accounting and auditing, believe it or not. So the one of the organizations, the AICPA, the Center for Plain English, if you're a member, you can get this information, so I can't share it with you directly, but you should consider looking into it. Came out with some guidance on accounting for bait. Pass-through entity tax, the alternative to SALT or the workaround to SALT. It's if you have this situation, especially since in New Jersey we came up with bait last year. Thank you, Alan Sobel. You should look into this because there's three alternatives that's provided. Under two scenarios, it's treated as a distribution. Under one scenario, it's treated as an income tax expense. Now, we prepared financial statements last year when there was no guidance treating it as income tax expense, and it seems very unclear right now. I'm almost leaning towards it maybe should have been a distribution. So now do we have restatements? How are the banks going to look at it now if it's distributions? These are things that we need to look into. I wish that this guidance had come out earlier, but if you do have financial statements that have bait, PTE, New York just adopted it last October. Other states have it. You really need to look into this because you want to make sure that you're accounting for it properly because this is a burgeoning area. Real quick, I will just say the general guidance is if the credit or the benefit is tied to one particular partner, shareholder, or the particular partners or shareholders, then it should be deemed a distribution. Now, I know New Jersey's form, real quick, Nicole, I'm not stepping on your area, but real quick, the New Jersey form that you do file says, here's my payment, and here are the partners that it's attributed to. That may be the kicker right there. So I really summarized it, but you should look into this, especially if you have it. If you don't have the access to it, talk to somebody. Don't try and get the information for free. I strongly advocate joining the organization. We joined recently and find it a fabulous organization. I'm not their salesman now. Okay, that was AICPA. Let's move on to some FASB updates. FASB came out with a research agenda relating to accounting for digital assets. Now, digital assets, cryptocurrency. I think that Sean did a presentation, an IssuesWatch presentation on cryptocurrency. The digital assets are a big concern right now because more and more companies are moving towards investing and using the digital assets. You need to try and get the information relating to this. Now, the AICPA, this is the FASB section, but the AICPA has put out a guide on this. Because the FASB has not really addressed it, they've said that they're going to be looking into it more, but they really have not addressed it. But the AICPA, if you are a member, again, you can get access to a really good guide. It's 85 pages long. I think that I may have shown it in the past, but you really should get your hands on this, especially if you have clients or your company is investing, buying crypto assets. One of the big things I do want to point out, there are many different aspects to it: hedging, derivatives, lending or borrowing with them. But one of the particular items that I like to point out when I do talk about this, of the 85 something pages that I kind of focus on that bugs me, is these are considered intangible assets. They're not currency because they're not been identified, accepted as currency, except for a few countries. I know a South American country. It's not accepted as currency, so it is not a financial asset. I don't know why they're not deeming it an investment. With like stocks and bonds and stuff like that with the traditional financial asset, but they're deeming it an intangible asset. Here's my problem with that, and this is editorial. My problem with it is what happens with intangible assets when they go down in price. You have an impairment. And what happens after they go down, that they come up? Nothing. Because under GAAP, US GAAP, if you would impair an asset, unless you adopt a 825 fair value accounting for other assets, and then you have to do it for classes of assets, if they go down in value and you impair, you cannot bring that back up. So always keep that in mind. The FASB is always working on identifiable intangible assets, not what I was just talking about though, and subsequent accounting for goodwill. Yeah, you thought after 142 and 142R, it's FASB 142, 142A, that they would have had this, but no. And of course, surprisingly, they bring up revenue recognition. Leases we'll talk about another time again, but they talk about revenue recognition. There was a Journal of Accountancy article out that talks about some tips on revenue recognition. Now, this should have been adopted a couple of years ago. I know there was a delay for COVID, but some of the tips they talk about are understanding the guidance and the facts. Work through the 5 steps. Yes, under 606, there are 5 steps that you have to consider when you look at revenue recognition. I'm not going to go through the 5 steps now because I only have under 5 minutes to go. But there are 5 steps. If you want, you can give me a call. I'll be happy to talk with you about it. But there are generally 5 steps: understanding the contract, understanding the deliverables, the purchase price, allocating the purchase price, revenue, recognizing the revenue. Went through the 5 steps really, really quick there, but those are the 5 steps. Be prepared to make judgments. Oh, yeah. Keep the investors in mind. That's because they always bring up, this does relate to public companies too. And ask for help. Don't try and do this on your own. I do peer reviews and I look at some of the financial statements that I get, and people are just not considering it in their work papers. Even if you do a comp no disclosure, you should have some sort of documentation about the revenue recognition policy. Because 606 is big, you want to make sure that they've adopted it properly, assuming it's US GAAP. Okay, whew, wow, went through those pretty quick, so I apologize if I'm talking fast. PCAOB, so the PCAOB has come out with a determinations regarding firms headquartered in mainland China and Hong Kong. This is not getting political here. I've heard this for years, that the PCAOB has been having a very difficult time inspecting firms that are headquartered in China, and now this is the first time I've heard Hong Kong. Getting accurate information. If you have audits with companies in China, sometimes it's very difficult to get information. So especially if you're dealing in an SEC registrant where the PCAOB is involved or SEC is involved, you should think about the particular ramifications. The PCAOB has created 2 new advisory groups that they're seeking for input on: the Standards and Emerging Issues Advisory Group, which is a remake of the Standard Issues Advisory Group, and the Investors Advisory Group. Jumping into some SEC. Now, some people may say, Brad, does this qualify for A&A because it's SEC? The reason why I bring up SEC is I always want you to think, how does this affect my company and accounting and the reporting, and how as an auditor do I have to consider looking at this? So I do deem this relating to A&A. That's for state board considerations and ethics seminars. But SEC came out with some non-GAAP reporting. Always keep in mind that non-GAAP results without any GAAP results you should not do. This is what they're concerned about. Charts and graphs overshadowing GAAP. Presentation of full non-GAAP income statement. That's a big one. I never even thought about something like that. Reconcile with non-compatible information, not most directly aligned with GAAP. You see where they're going with a lot of those. And then mislabeling, or metrics not consistent with other information within the documents. Okay. SEC did issue a risk alert on private fund managers and their issues therein. You're saying, wait, Brad, SEC, private fund managers, why are we connecting the two? Because you have the SEC Act of 140, you want them to be in violation of that and falling under. And there's a lot of disclosure and representations that they find that private fund managers are making, that they want to make sure that they're not inappropriate. So if you're with private funds or deal with private funds, you might want to look into that. And lastly, I might mention this again next time because my time is running out if it hasn't already. Lastly, New Jersey nonprofits New Jersey has just said that the minimum for audits now has increased to $1 million of revenue. Anything under that, you don't need an audit. We'll talk more about that next time. So in closing, I'd like to highlight a couple of upcoming NJCPA events you might be interested in. On February 18th, Frank Boudelet and I will be presenting a 3-credit accounting and auditing webinar, update webinar with replay on February 23rd. Register at njcpa.org/events. And Frank and I will also be speaking at the NJCPA Convention and Expo, which we're excited to have back in person at the Borgata in Atlantic City on, get your calendars, June 14th to the 17th. And it's not just going to be Frank and myself. There's going to be a lot of great people there, great people to see. Register at njcpa.org/convention. And as always, I recommend that you join the NJCPA Accounting and Auditing Standards Interest Group by going to njcpa.org/groups. Thank you for joining us.